Next in our series of trading with dual time frame strategies is using stochastic oscillator. On multiple time frame, stochastic oscillator does a fine job in dual time frame trading. The idea is same, trading on daily in the direction of weekly momentum. Let's go ahead and take a look on some of the examples. So this is a chart of Dr. Reddy. On your left hand side is weekly chart of Dr. Reddy. On the right hand side is daily chart of Dr. Reddy. In our weekly chart, let's go ahead and take a look at stochastic indicator level. You can see as of the last bar, stochastic is in the region of below 20, suggesting that weekly is now reached its oversold zone. From here on, Dr. Reddy might turn its direction and go up, or Dr. Reddy might consolidate and prices might move sideways. As of the last bar, stochastic oscillator has given a bullish crossover. Let's go ahead and see at our daily chart. You can see stochastic oscillator has given a bullish crossover. So what does this tell us? On weekly, stochastic momentum is oversold. From here on, prices should not go below the level of 2300. Obviously, in such conditions, we will try to buy into the market. Daily, as of last bar, the setup is ripe to enter a long trade. Let's go ahead and add some bar and see what happens next. We are triggered into a buy trade at this price level and stop at this level. Let's go ahead and add some more bars. Stochastic on daily has reached the level of 80. Tighten our stops, and finally we are stopped out at this price level. Finally we are stopped out at the level of 2650. Our next chart is a chart of escorts. Left hand side weekly, right hand side daily. Let's go ahead and take a look at our weekly chart. You can see weekly stochastic momentum has reached oversold zone, suggesting that prices downtrend in the prices might be either over or prices might consolidate towards the side, towards sideways. Right, let's go ahead and add some bars, but before doing that we will make a trading strategy for this situation. Since weekly has reached oversold zone, there are chances that prices might either consolidate sideways or change their direction and go up, but prices continuing downwards, chances of prices continuing downwards is very less. So our trading strategy is, once weekly reaches 20, below the level of 20, we will look to buy on daily. So once daily stochastic gives us a bullish reversal signal, we will buy into the trade. Alright, let's go ahead and add some bars. As of the current bar, fast line of weekly is near to 20, but it has not breached 20 as of yet. Let's go ahead and add some more bar. You can see fast line has breached the level of 20 at this bar. So, and on daily chart it's already given a buy signal, so we'll buy above this price with a stop of this swing low, and our minimum aim is that prices must breach this high, or stochastic on daily must reach at least the level of 20, if not stopped out. Let's go ahead and add bars. Triggered. Fast line on daily reaches the level of 80. Prices breach previous highs. Now that prices have reached previous highs, we can either revise our stop and place our stop strictly, or let slow line of stochastic reach the level of 80 and then we will strictly place our stops. Okay, so as of the current bar, stochastic percentage D has breached the level of 80. We'll place our stop to this low Add some more bar. Stop was never taken out. Revise the stop to this low, and we are stopped at this current price. Our next chart is chart of Glenmark. As of current bar, weekly has given a bullish crossover, and daily is in the region of 55-53 in bullish mode. Now that weekly has given a bullish crossover, the idea remains same. Once daily stochastic reaches the level of oversold, we will look to buy into this trade. Let's go ahead and add some bars. Now daily stochastic oscillator has reached the level of 20, suggesting that it is now in oversold zone. Weekly has given a green signal to buy, suggesting that prices might be now trending in the upward direction. Our plan is to buy once stochastic oscillator on daily gives a bullish reversal, and aim is at least taking out of this high of stochastic oscillator reaching the level of 80. So let's see what happens next. Oscillator on daily gives a buy signal. Place a buy order at this price. If triggered, this will be our stop loss. Never triggered. Oscillator continues to be in buy mode. Revise stop, entry, stop, entered, place stop loss. Let's go ahead. Weekly has given a bearish crossover, but at this point we cannot do anything because the week is not over as of yet. We will have to wait until either the Friday of the trading week, or we can keep our stop unchanged. We can be either stopped out, or whatever the trade comes, we will trade accordingly. As of the new bar, weekly has given a crossover. Alright, but still we will place our stop and forget about the trade. It must either breach to a new high, stochastic on daily must reach 80, or we will be stopped out anyways. Let's go ahead and add some bars. Here weekly turns up in the positive zone, prices break out to a new high but not yet above 780. Let's go ahead and add some bars. There prices break to a new high and stochastic has reached the level of overbought. We will now revise our stop strictly, aggressively, and we are stopped out at this price. Or you could have taken out some of the position at the level of 800, assuming the fact that 790 has already acted as a resistance, so 800 will definitely act as a resistance. So from the examples you learned, stochastic oscillator can be used in multiple time frames to trade into markets, and you saw how potential the uses can be to increase efficiency of your trading. Let's take a final revision of what we learned in previous chapters. Trading with only one confirmation is sometimes not so wise a decision. Hence, it's better to take confirmation from two or more indicators about a given setup. It's always good to trade in the direction of higher time frame, as higher time frame cycles almost always exert their effect on lower time frames. Trade momentum strategies like reversals from overbought and oversold regions and divergences in the direction of higher time frame.